Well, we're really close to the tax quarter, which means we should be taking a look at our tax-saving funds. And we have a very interesting fund in the market, the Axis Long-Term Equity. It's a fairly young fund compared to the others. And I want Dhirendra to give us a review. Dhirendra, CEO of Value Research, joins us on the show. Thank you so much for joining in. Let's take a look at Axis Long-Term Equity. Now, despite the fact that the fund is only 4 years old, it's been a tremendous performer, especially in a difficult market. Are you impressed as well, Dhirendra, with the fund so far?
Yes, absolutely. This fund has been very impressive, and it turned out to be a 5-star fund, so, on its earliest completion of its 3-year term. And this fund is still showing its preferences, and it has done it with great simplicity, a very simple strategy, high quality companies, and not as much attached weight attached to the valuations. And in a difficult market, in a very turbulent market, in a market when when many of the old stalwarts are struggling, this fund has been able to make a very impressive run so far. So yes, it is only as it gets older, as it gains vintage, yes, it's only becoming more impressive.
But Dhirendra, you always advise us that when we choose a fund, we should pick one with a really long-term track record. Now, will this fund then be an exception to your rule? Can we pick this fund in spite of the fact that it only has a 4-year track record so far?
Yes, it's an impressive fund. And I would say that, yes, it is worth considering this fund. But at the same time, it's very important to see that what will work in future. And from that standpoint too, this fund looks impressive. But I would say that you still have time. Some of the funds which we like is, we very much make a listing, and this can well be part of that list.
Right, it's time for a question from one of our viewers. Vineet Jain has written in. He invested in the Tata Indo Global Infrastructure Fund during its NFO. The fund has performed poorly, he says. Its current NAV is 6.5 after almost 6 years. He wants to know what he should do now. Most infrastructure funds have been disappointing. Dhirendra, what would you recommend he does now?
Get out of this fund and get out of any infrastructure fund as well. There are few reasons. One is that most investors have gotten out of these funds. The best time for these funds are over, and the good times don't seem imminent, because many of the underlying companies, they are still leveraged. They are unlikely to be generating very substantial return, unlikely to witness a financial turnaround. That apart, nothing prevents a normal fund, a normal diversified fund, to have substantial allocation to infrastructure stocks as and when opportune. So by investing in infrastructure fund, you are basically depriving yourself of, you are constrained on, one is that it's not a pure play. Infrastructure funds invest in everything but pharma and technology, technology and FMCG. And these are the sectors which have done well. So it's a compromise on diversification, and other funds can well emphasize infrastructure stocks in their portfolio as and when it is opportune. So most investors who are invested in infrastructure fund should exit them.
All right, exit infrastructure fund. Consider the Axis Long-Term Equity if you're looking for tax saving. Many thanks, Dhirendra, for joining us on the show.